Hello everyone, I am Michael Ruger. I am the managing partner of Greenbush Financial Group. There's really good news for business owners of pass-through entities. So when the big beautiful tax bill was working its way through the House, it was feared that they were going to eliminate the PTET deduction or the state tax deduction for the workaround of the SALT cap. Luckily, when it made it through the Senate and in the final bill, the PTET is still in existence and business owners can continue to use that tax years 2025 and years going forward. The reason why these PTET tax programs at the state level existed in the first place is when they passed the Tax Cut and Jobs Act back in 2017, that's when they first put in that $10,000 SALT cap. So if a business owner was paying, let's say, $60,000 in state income tax, they were still capped at that $10,000 deduction. So what the states did is they found a workaround that said if they allowed the business entity itself to pay the state tax on behalf of the business owner, then essentially they were recapturing the tax benefit of taking the full deduction. Now, while they did raise the SALT cap from $10,000 to $40,000, there's income phase outs for that. If you're making over $500,000 a year, you may not be able to capture that full $40,000 SALT cap deduction, where if the PTET is in place, it doesn't matter where your income level is. Usually the business owner can benefit from being able to deduct their state taxes through their entity. Now, this is the first time you're hearing about the state workaround for pass-through entities or these PTET programs. We have a whole separate video dedicated to this topic, which I'll include in the description of this video below. But no, there's some hoops to jump through. You got to do annual elections. Your entity has to make estimated tax payments on behalf of the business owner. There's some due diligence that has to be done. Now, for some business owners, this is going to be a double win. They're going to win because PTET is still in place and the SALT cap has been raised to $40,000 per year. And it's going to be mainly the business owners that have probably high property taxes. So if you look at a business owner that in 2024 paid, let's say $60,000 in state income tax and let's say $30,000 in property taxes. So they were able to use PTET to take a full deduction for the $60,000. But when they got over to the individual side of their return, they were stuck at the $10,000 SALT cap. So maybe they were just taking a standard deduction and calling it a day. Versus if that same business owner in 2025 has the same $60,000 as state income tax, $30,000 in property taxes, essentially they'll still be able to use PTET to capture the full deduction through their entity for the $60,000 in state taxes paid. But now since the SALT cap is now $40,000, they might be able to deduct the full $30,000 in property taxes if they have other itemized deductions. That might get them over and above the standard deduction in 2025 of $31,500, so they actually benefited from both. This is just one of the many tax law changes that this big, beautiful bill made, especially for business owners. So we're going to be putting out additional content and all the tax law changes, and we'll include links to all those videos in the description of this video below. Thank you for watching.